We decided today to lower the target for the federal funds rate by 1/4 percentage point.
For the first time in more than a decade, the U.S. Federal Reserve is cutting its key interest rate. In a widely expected decision, the move will see the American Central Bank cut its benchmark overnight lending rate to a target range of between 2 and 2.25%. The rate affects many loans for households and businesses. Why do it now?
It is intended to ensure against downside risks from weak global growth and trade policy uncertainty, to help offset the effects these factors are currently having on the economy, and to promote a faster return of inflation to our symmetric 2% objective.
Some of the uncertainty surrounds Donald Trump's trade wars, like his rift with China. Critics, though, say the rate cut won't give the economy a boost, and that it actually removes a tool that could be needed to revive the economy if it falters. Trump himself has been a vocal critic of the Fed's policies, but he has been demanding a bigger cut.
I would like to see a large cut.
That comment came yesterday. Today, his reaction to the cut, Trump tweeting, as usual, the chairman of the Federal Reserve has let us down, posting in part what the market wanted to hear from Jay Powell and the Federal Reserve was that this was the beginning of a lengthy and aggressive rate-cutting cycle, which would keep pace with China, the European Union, and other countries around the world.
What could the decision south of our border mean for us here in Canada? We put that question to 680 News business editor Chris McCusker.
So essentially, the U.S. Federal Reserve more or less sets the tone for interest rates. And what we have heard from the Bank of Canada recently is that the bank is very likely to stand pat, at least for the near term, and not really be influenced by the Fed, although a lot can change between now and the next Bank of Canada meeting. But if the Fed continues to cut, and that is still a question mark at this point, while the Bank of Canada does nothing, that can be problematic for our exporters because it could drive the Canadian dollar higher. At the same time, Canada is one of the most indebted nations in the world, so a cut in interest rates might be a concern to the Bank of Canada that people could essentially take on more debt.
And something Chris mentioned there, the lingering question mark, and something that's being watched very closely. It's the question, will the U.S. Federal Reserve announce another rate cut? There is some language that may be a sign of action to come. The Fed's saying it will continue to monitor how incoming information will affect the economy, adding this, it will act as appropriate to sustain the expansion of the economy.